Is Bitcoin going to 12K, and is Blackrock heavily manipulating the price to buy it all up? Is Solana ready to make a comeback? And these three altcoins pumped hard on NVIDIA news. This is your Altcoin Buzz News. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when I drop the latest content. Follow us on Twitter, AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Bitcoin has now entered into a new range of 25.6K to 26.8K after a big 10% drop last week. It can start to feel like this whole Bitcoin ETF thing is never going to happen, and we're going back to 12K if BlackRock's ETF doesn't get approved, but here are the facts. Mags on Twitter wrote a post recently saying Bitcoin is not going back to 12K. Here's why. 93% of all Bitcoin has now been mined. The world's largest asset manager, Blackrock, files for a Bitcoin spot ETF. A mysterious wallet accumulated $3 billion worth of Bitcoin in just 3 months, although we now know that this was just Robinhood. Europe gets its first spot Bitcoin ETF. Only 6.3% of the total Bitcoin supply is left on exchanges. The Bitcoin halving is in just 8 months, and the Bitcoin supply shock is inevitable. This could be the final shakeout and manipulation before the real bull run begins. The next 2 to 3 months are going to be important. So while I do agree with Mags on a lot of his points, it's the last part that I think we need to consider the most. This could be the final shakeout and manipulation before the bull run begins. So we know that every big financial institution wants to have a spot Bitcoin ETF, and to do that, they need to have actual Bitcoin to back it, which would mean that there would need to be a lot of big players buying Bitcoin. So you're probably thinking, why hasn't the price just gone up yet? Well, we need to put ourselves in the shoes of BlackRock, the world's largest asset manager, and think what would be best for them since they're the ones who can affect the price the most. First things first, they aren't buying the majority of their Bitcoin on exchanges. You won't see a $1 billion buy order coming in from them. They'll be buying most of it OTC from governments, funds, and crypto whales so that they don't affect the price while accumulating. They also want to get the best returns for their investors when the Bitcoin ETF does come out, so having an average buy of under 20K would be most ideal. In order to do that, they need the price to be roughly around there if they haven't already bought Bitcoin OTC from these large players. So what they need to do is drive the Bitcoin price down with a bunch of new FUD, such as ETF delays, Binance going down, crypto companies being sued left and right, and a potential new virus and lockdown coming, whatever it might be. All that combined with calculated short selling of Bitcoin to liquidate big players and get the price down as much as possible before the halving. Now, what does this mean for you if you hold Bitcoin or any alts? Well, just expect more manipulation, especially in September, the worst month for Bitcoin historically, and just know that price will be higher in a year's time. I do expect we'll see more violent sell-offs and even possibly wicks down to previous lows, but I imagine they'll get bought up pretty quickly with how many people are looking for amazing entries as we get closer to the halving. So while I don't think we'll go under 18K, just don't sell all of your crypto at the lows because you know all the biggest funds are looking to buy it up from you. We know this because every big fund is giving Bitcoin price predictions for the next cycle, and they expect it to be anywhere from 150 to 300K in 2025. Just recently, Pantera Capital released a letter calling for 150K in the next halving. They said Bitcoin has historically bottomed 477 days prior to the halving, climbed leading into it, and then exploded to the upside afterwards. Post-halving rallies have averaged 480 days from the halving to the peak of the next bull run cycle. That same theory suggests that the 2022 bear market bottom marked the current Bitcoin price cycle bottom. Looking forward, by the halving date in April 2024, Bitcoin could be trading at around $35,000, something that it's still on track to accomplish. However, what happens in the next 480 days afterwards involves not only a new all-time high, but much more. If history were to repeat itself, the next halving would see Bitcoin rising to 35K before the halving and 148K afterwards. 480 days from an April 2024 halving makes Bitcoin scheduled to hit its new all-time high by July 2025. One of the oldest crypto exchanges, BitStamp, announced that it would discontinue ETH staking services for US customers starting in September next month. The development comes amid a crackdown by the United States Securities and Exchange Commission. Ethereum started offering ETH staking in December 2020, much before the blockchain transitioned to a proof-of-stake network. However, the SEC considers certain products related to staking as unregistered securities. Bobby Zagoda, CEO of BitStamp US, mentioned that customers will continue to receive staking rewards until September 25th, 2023. After this date, all staked assets will be unstaked, and both rewards and principal will be added to users' primary BitStamp account balances. The usual duration for the procedure is just a few days, though it may be extended based on the network circumstances. The U.S. Securities and Exchange Commission has taken legal action against staking service providers in several cases. In lawsuits against both Coinbase and Binance, it argued that their staking programs can be considered investment contracts according to the Howey test. In June, the agency filed a lawsuit against Coinbase Global, alleging that the company violated its regulations by providing staking services. Crypto exchange Kraken previously halted its staking offerings in the US after announcing a $30 million settlement with the SEC to resolve similar allegations. AI-related tokens gained after NVIDIA posted earnings that topped estimations on Wednesday. After the chipmaker's second quarter report, artificial intelligence tokens such as Fetch AI, The Graph, Render, and SingularityNet all gained. The price action suggests that investors see potential in the intersection between crypto and AI. NVIDIA shares climbed over 6% in extended trading on Wednesday after the chipmaker beat already high expectations with a revenue of $13.51 billion, a 101% jump from last year. AI tokens are cryptocurrencies associated with blockchain-based AI projects. For example, Fetch AI is dedicated to building infrastructure for smart, autonomous services or AI agents in supply chain, finance, and travel. SingularityNet is a decentralized blockchain-based platform aimed at creating a marketplace for various types of artificial intelligence services. Jensen Huang, founder and CEO of NVIDIA, said that companies worldwide are transitioning from general purpose to accelerated computing and generative AI. Today's result follows NVIDIA's blowout first quarter results from last May, which revealed an extremely bullish outlook for revenue tied to AI. Now, while I do think this minor boost in AI tokens off the back of NVIDIA's earning news is cool, I do think when Bitcoin falls, it'll bring all alts with it, even AI, so this isn't the spot that I'd be going all in on them. It's fine to DCA, but I imagine we'll get much better prices for them over the next 2 to 3 months. But when this next bull run does come, I believe this will be a strong narrative with the ties in traditional finance as well. This Saturday, Avalanche will unlock roughly 9.54 million tokens valued at $99 million. Over the next year, there will be a 25% token supply increase, totaling 84.2 million tokens, according to data from Token Unlock. In this next unlock, strategic partners will receive 2.25 million tokens worth $23 million. This may include partners like Amazon, which became partners with Ava Labs through its AWS partner network. 1.67 million tokens worth $17 million have been allocated to the Avalanche Foundation. The teams within Avalanche are allocated 4.5 million Avax worth $46 million, and 1.1 million Avax worth over $11 million will be community airdrops. Traders will be closely watching the impact of this unlock as 2.77% more AVAX tokens are added to the supply. The AVAX token is trading at $10.30 at the time of writing, and the value of the AVAX token has declined by more than 4.5% in the last 24 hours. While Avalanche is a good chain, you also have to look at the total number of tokens that have come out since its all-time high and take that into consideration if you think that it can get back to all-time highs again. Not just AVAX, but all older tokens that have had a massive unlock since their all-time high. The amount of tokens get diluted so much that many tokens won't reach their all-time highs again, which is why many in crypto say to always focus on the newer tokens because when they come out, there's low circulating supply and most tokens are locked up. E-commerce giant Shopify has added Solana Pay to its pool of options for payment, allowing millions of merchants to use the platform to accept crypto transactions, kicking off with the USDC stablecoins. Josh Freed, Business Development and Partnerships at Solana Foundation, emphasized that this choice was deliberate. Given USDC's close tie to the US dollar and its regulatory compliance compared to other coins, it stands as an attractive option for merchants and consumers alike. There appears to be an ongoing stablecoin war as new stablecoins are launching all the time and competing for market share, and recently Coinbase even took part equity in USDC as well. And soon Solana plans to add other altcoins to the platform in the coming months, including their native token Sol and the meme token Bonk. Josh Freed branded the intersection of digital assets and payment solutions as the killer app for crypto, adding that everyone should be doubling down on this. According to Freed, Solana Pay can drastically reduce transaction costs compared with credit card processing fees. The Solana network's average charge is 0.00025 per transaction, while credit card processing fees range from 1.5% to 3.5%. Shopify estimates that 10% of all e-commerce transactions in the United States, or $444 billion of the world's e-commerce market, are made up through its platform. The company has gradually integrated Web3 solutions into its operations, including a suite of blockchain commerce tools for Web3-focused stores and crypto wallet-connected features. Shopify's volume will serve as a proving ground for the Solana blockchain. In previous years, Solana struggled with reliability and uptime issues. Its co-founder, Anatoly, dubbed this issue as the curse attributed to the network's low-cost transactions. Recent stats, however, indicate the network's performance is improving. According to its latest performance report, Solana has experienced 100% uptime since February 25th, marking an entire quarter without an outage. We're also covering Solana technical analysis in a TA series we do every day at 5 p.m. EST, so make sure to go check that out as well, link down below. That's it for Altcoin Buzzy's update. I'm host Cody Buffington. Thanks for watching.